of the morning, Dan and Amy. Wall Street Journal opining this morning after the failure of the Senate GOP legislation to get the cloture vote last night. The Senate virus may help the economy stave off a depression. Federal state governments have shut down much of the American economy. Now Washington is moving to lend its balance sheet to compensate for some of the losses it is causing. The foremost goal should be to provide liquidity to prevent defaults and business failures that will cascade into mass layoffs and another depression. We're well beyond the talk of recession now, aren't we? Which is precisely what we've been saying for the last week. But the Wall Street Journal cautions the window for providing liquidity to stressed businesses is closing faster than many realize. Markets face another tumultuous week. Many industries hard-pressed to find financing. REITs with investments in shopping malls that have few customers as people are staying home are one problem to watch. Non-bank financial institutions are another. The most urgent need is for the Treasury to have more money to backstop the Federal Reserve as it stands up one or more facilities to provide liquidity. And the market interventions announced this morning, billions of dollars in Treasury purchases by purchases by the Fed, securities purchases, as well as mortgage-backed securities to provide some of the liquidity that the Wall Street Journal editorial board is advocating for. For more on the topic, we're pleased to be joined by our friend Kevin Bastuga, who's the co-founder of Signature Bank, Chicago's business bank, which focuses on customers right exactly in the path of this financial storm. You're talking about small to mid-size, a lot of family businesses, owner-run businesses, and those small businesses that everybody talks about wanting to intercede on behalf of. But as we talked to Houston Loper, the catering company owner
made me cry.
in North Carolina at the bottom of the 7 o'clock hour, there is real disagreement about what the best path is and how quickly that path needs to be cleared. Kevin Bastuga, thanks for joining us. Appreciate it.
Thank you both, and good morning.
Good morning.
Wish we were talking about a more happy topic. But,
yes. Well, tell us.
Let's dig in.
Tell us, what your clients are saying to you, and what you're saying. As you level up to policymakers, these are the recommendations we would have if you want to achieve the goal that everyone seems to have, which is keep businesses afloat and keep employees employed.
So, as we all kind of sat and watched this unfold last week, most of us logically thinking that this would lead to Governor Pritzker's order to stay home for the next 2 weeks. The landscape, both in terms of the financial effect, the regulatory guidance that we have or have not gotten, a lot of that has been cleared up in a matter of 7 days. And you spent some time there, and you've spent some time in the past days talking about the liquidity in the system. And I think that's the biggest concern for the companies that we bank is my line of credit going to be there in 2 months when I need it, or should I draw it now? Tell me what to do kind of thing. I will make the point that this characteristically, and I think Stephen Moore last week said the same thing, doesn't have the same causal sort of nature that 2008 had, meaning that there was a real economic weakness that was propped up by people getting credit that probably shouldn't have gotten credit.
Right.
People's dogs were getting mortgages.
This is a pandemic event that's just going to cause worldwide interruption. So while it will delay revenue for a lot of these companies and it will cause folks to cut costs and do layoffs and such, which will in turn slow down consumer spending, this is a recoverable event, and certainly the Treasury, the Fed, are stepping up to put whatever liquidity into the system that they need to.
Are you fearful that some of your small businesses that you help are going to have to declare bankruptcy?
Amy, at this point, not yet. There's a couple, there's a couple things that are happening out there. I think the biggest and most relevant of which is this: the Small Business Administration has put in place a disaster loan program. It's called the Emergency Disaster Injury Loan Program. is, literally taking shape day by day as to how deep the funding is going to be on this. But from what we know right now, this is going to be a fantastic program for the SBA to get credit directly out to these companies at very favorable terms. The guidelines on this are loan amounts up to $2 million with an interest rate of 3.75% and
Right.
an amortization over 30 years. So now, will every loan look like that? No. This will still be something the SBA underwrites based on need. But this is the kind of liquidity that we need to get into the system so that people don't run to lay off their entire workforce. Maybe they can carry those payrolls for a while in anticipation that maybe within 60 to 90 days, things are somewhat back to normal.
Yeah, but so I get that, and that may make sense, and that may be possible for some concerns in, say, the manufacturing sector that can claw back the business they've foregone over the last couple of weeks. But that's not the case for a lot of employers who can't, who aren't going to get that backlog of meals they didn't serve or or hotel stays they didn't get. And so it seems to me, as we've been arguing for the last week, that you want, rather than SBA loans in this process, or perhaps in addition to, that you want the government to intercede and cover payroll right now for small businesses, at least in those service sector, hospitality, lodging areas, because otherwise you're going to see millions of people that are out, and you're going to have this sort of economic death spiral going on. They can't last 30, 60, 90 days without revenue.
No, Dan, you're exactly right. I just this morning before I came on, I looked, and there were 2 million additional unemployment claims just last week. And so what you described is a scenario that we all want to avoid. And I think what we'll see coming out this week, hopefully this aid package gets out of the Senate and gets approved. And I would hope that includes a large grant package for small businesses to do exactly what you just described. Grants, meaning they don't have to be paid back, or possibly in the form of forgivable loans that if they receive a loan, make payments for a couple of years, and the loan is just forgiven. So in effect, has the same effect as a grant. The hospitality industry obviously is the one that's been hit the hardest, the quickest. Everybody should be still ordering carry out from their favorite restaurants and try to support those folks that are still trying to make that work. But it's going to be a rough couple months. There's no question about it.
With going back again to your clients, just because I said they're sort of in the sweet spot in terms of the backbone of our economy. What they're reacting to what they're hearing at the federal level, the SBA maybe $50 billion, and then another $250 billion in another form of low interest loans. That's one thing. But the argument last night was seemingly in part over executive compensation and what the caps on that should be, and how long those caps should last, and other such ancillary issues. And I wonder if you're getting any feedback on the other component parts of what has been proposed by Republicans.
Haven't gotten any feedback yet on that. I think principally there are some issues there that need to be dealt with. Certainly, the president's been outspoken that any aid packages that go directly to large companies, he doesn't want stock buybacks to be any part of that. And,
right.
And I would agree with that. I think banking is an industry. It took a long time to get the credibility of the industry back after what happened in '08, and it feels like we're kind of there. And if there are rules and stipulations that come along with these capital aid packages, because of the nature of this event, I think we all need to just grin and bear it, and sort of take that recommendation on its face and say, well, it's free capital, and if it comes with stipulations, then so be it.
What about the Wall Street Journal's concern, going back to that editorial, about REITs and non-bank financial institutions and how wobbly they are?
Yeah, that's a sort of a secondary finance market, right? Where those folks have played a pretty crucial role in the expansion of the economy here in the last 7 or 8 years as non-traditional lenders. These REITs may come in, both as a senior finance position and as well a subordinated one in order to get some of these projects done, which in turn employ a lot of people and then increase the hospitality industry. So there's a risk out there that some of this money could get misused or could get misappropriated. I think logically there's an expectation that when you're putting something out on this scale, it will. And there's only so much you can sort of legislate on this at the front end. But I think, if I were in D.C., I'd be prioritizing speed as opposed to trying to root out contingencies and just leave the government some room there to maneuver to make sure that all the funds are being used properly.
How did you receive the comments by Peter Navarro and President Trump last night about nationalizing businesses? There's been a call from mayors like de Blasio to nationalize businesses, and they've resisted that call. Trump saying, look, he didn't say this, so I'll put it in my words. Basically, we've got cooperation from all these big businesses. We intercede to take over a business or a sector. We have no idea how to run these businesses. So why would we do through force something we're getting through cooperation? And then Navarro just saying, look, there may be needs to down the road to intercede at some point in the in the supply chain, but it's not right now.
Right. I was able to watch quite a bit of coverage yesterday and saw, Mayor de Blasio, Governor Cuomo, with, trying to really indicate a sense of urgency and indicating that the president should enforce the Defense Protection Act immediately and mobilize those businesses. I side on the Trump-Navarro sort of policy here that companies are stepping up and the government is not in any way, shape, or form capable of nationalizing any industry or nationalizing any sector of any industry that isn't making this equipment right now and telling them how to do it. That is a multi-year kind of process. From a readiness standpoint, there's an argument there over whether maybe we should be, because this one came on so quick. But I don't think now is the time to, making broad strokes that look like nationalization.
And you're right
where
there.
It comes down to strategically, where it's one company that has specific capabilities. You would hope that those companies, if they get a call from the White House or from their state leadership asking them to shift production, that they'd be willing to.
Yeah, 3M is working around the clock. They never closed their plant making face masks.
Right.
They halted manufacturing of Ford engines, and they're ready to start making ventilators if they need to. Mm-hmm. So I think that businesses are cooperating, and they don't need to do that.
He is Kevin Bastuga, co-founder of Signature Bank, signaturebank.bank. Kevin, thanks for joining us. Appreciate it.
Thank you both. Take care, guys.
And he joined us on our Turnkey IT answer line.